Hi everyone, welcome to my channel. I am Doris, and today I want to share with you about how my account is doing. So far I've made $1,242.9 US of profit, and today what I did is to sell my Tesla stocks that I bought in yesterday, because I think the trend of bouncing back is over, and that made me reduce some loss. So I sold them around $138.8, and now my account actually has no position currently. As for how the market is doing today, we can see that it's showing a great increase overall. The Dow Jones rose 526.7 points, which is about 1.6%, and Nasdaq rose about 162.26 points, and that's 1.54%. The three major US stock indexes generally rose sharply overnight, as consumers' improved sentiment and better than expected corporate earning data boosted risk appetite ahead of the holiday. Two stocks that I want to particularly talk about are Fedex and Nike. Fedex rose $5.62 or 3.4% to $169.99 on Wednesday, because after the company reported a lower profit as global trade slowed, but the drop was less than analysts had expected. Nike has shown a dramatic increase today as it released its earnings this week. Just by today, Nike jumped $12.54 or 12% to $115.78 on Wednesday, after the company raised its revenue outlook and beat Wall Street expectations. Shares of the retailers had their biggest one-day gain in 1 to 1.5 years and were the best performance in Dow Jones and S&P 500 on Wednesday. This gave investors confidence about the impact of the high interest rate on the profits of the companies. In the bonds market, longer-dated U.S. Treasury yields were little changed on Wednesday as investors awaited inflation data due on Friday for further clues on whether price pressures continue to ease. The benchmark 10-year U.S. Treasury yield was steady on the day at 3.647%. The 2-year U.S. Treasury yield fell to 4.204%. The inversion of the 2-year and the 10-year U.S. Treasury yield curves has eased slightly, with the spread narrowing to minus 53 basis points. Judging from the economic calendar, against the backdrop of thin market trading days before Christmas, the U.S. economic data has almost become the main focus on the market. Wednesday's economic indicators also contributed partly to the rally in U.S. stocks. While U.S. existing home sales fell for the 10th straight month in November, U.S. consumer confidence rose more than expected, reaching the highest level since April as inflation eased. The data showed that the Consumer Confidence Index rose to 108.3 in December, which was higher than the median forecast of 101 economists surveyed by the media. The revised Consumer Confidence Index in November was 101.4. The data also showed that the worst period for inflation may be past already, with the median expected inflation rate falling to 5.9% over the next 12 months. Inflation expectations fell back in December to their lowest level since September 2021, with the recent drop in gasoline prices a major driver. The chief investment officer of CIBC Private Wealth US pointed out that we will pay attention to whether spending and income can resist inflation. At the same time, people expect the core PCE price index to decline further in November, which is a key economic indicator and one of the Fed's key indicators. Bill Adams, chief economist at Comerica Bank, said U.S. real GDP data for the third quarter, which will be released on Thursday, may be revised down and may be flat in the fourth quarter. Meanwhile, Friday's data will give investors more insight to the state of the U.S. consumer spending. That's all for today's market update. Overall, investors have shown an optimistic attitude towards future performance of U.S. economy. Thank you for listening. See you next episode.